So I was asked to talk about online investing and the future of AngelList, and that's a little unfair because I know what the future of AngelList is, at least in the near future. So I thought I'd talk some about what's been happening in the trends and statistics we're seeing on AngelList, and then can explain some about what that means to investors and companies and so forth. Before I begin, I'd love to get an idea of who I'm talking to. How many people here are LPs? All right, that's good. How many people are like GPs, fund managers? Good. And entrepreneurs? Okay, pretty close to almost a third, but good. So I'm going to rewind a little bit. How many people here have AngelList accounts? Okay, so I won't go too much into the history. I think I've got an audience that's fairly familiar with it. You may not be familiar with this, though. This is actually the beginning of AngelList. And there's a reason it's called AngelList. It was a list of angels, and that's all it was. So we put out a list of angels and said, here's how you contact them. And that didn't last very long. And it didn't last very long because they got contacted by everybody who wanted money. And so we needed to go back, retrench, and make a service that helps figure out who was supposed to be talking to whom. And that's what AngelList is today. But as soon as we set that up and had a service that was starting to make introductions between investors and companies, our lawyers said, wait a minute, that looks a lot like a broker. You shouldn't be doing that. That would be illegal. So this is what Naval said to me in November of 2011, which is, if the law says we can't do that, change the law. So that was our job for the next year or so. And we worked very hard on getting a piece in the Jobs Act, the 201c platform piece that governs what a platform that introduces accredited investors to companies can and can't do online. So there's also crowdfunding, which we'll talk about later, but this is a different section, and this is all about the accredited investors, which led to what AngelList is today. So we have the layer that I was talking about, the social network for startups, the layer that the Jobs Act allows, which is the fundraising, and then the talent section, which has become a very big piece of what AngelList does. So I'll start briefly with talent and give an update there and talk about what we're doing there. On the talent side, at this point, there are about 40,000 new candidates coming in every month to the talent platform. About 5,000 new job listings every month, which has led to over 10,000 hires to date, and that's taking off at a crazy rate. It's primarily startups, or I will call, some of them are getting quite large, like Stripe and Ship and some of the others have exited that early stage startup, but still tech startup area for where the jobs are. And we are now moving into what we call A-List. We actually put it on its own domain. You can check it out at alist.co. So we have a beta now that's up where we're testing doing more screening on the candidates and helping the companies hire. This is actually our first cash paid product on AngelList. So we may actually have a cash business model to tie to our carry model, which I'll talk about in a minute. So for those of you who are hiring, check it out. On the fundraising side, so syndicates is what the Jobs Act and some subsequent SEC no action letters allowed us to do. Syndicates are structured as pop-up online venture funds. So a venture fund that invests in one and only one company so that the investor knows which company they're getting into at the time they invest in the syndicate. So the LPs get to invest in one deal at a time. Everything's done online. The model we always had in mind was making investing for the LPs as simple as shopping on Amazon. The deals are led by experienced angels and VCs who put their own money at risk. So you're following after somebody who's writing a check. The leads earn carry, but there are no management fees for the LPs to pay. The LPs can be individuals or institutions. The syndicate leads and the investors are often founders, very close to the startup community. Well over 50% of the investors on AngelList today are still founders. And it's designed for scale. There's over 165 syndicates, and that continues to grow. So it's financing deals done by accredited investors, leveraging the expertise of that lead angel. So getting more concrete, just a quick example, syndicates. If Elad Gil is an investor, he's backed by 38 other investors for $150K into a deal. He has a company that he wants to invest in this case, Patients Know Best. He can invest up to $175,000 in that company. He writes his own $25,000 check into the company, and then the syndicate comes on behind him, invests in a fund that AngelList creates that invests $150,000 into the syndicate. Out of that, Elad gets a 15% carry, AngelList gets the 5% carry, and there are no management fees ongoing. All of the fees are in carry. So to date, that launched in September of 2013 was our first big syndicate, which turned out to be SHIP. We have since then had about $1/3 billion flow through AngelList syndicates into companies. That's been over 1,000 companies, 500 of which are just in the past 12 months alone. Over 3,000 investors have invested into those, but you can see the median raise remains small. Now, we've had a large range. We've had things from $25,000 at the low end, although we try not to do things that small, up through about $12 million is the largest syndicate that's flowed through. But because it's primarily early stage, it tends to be a small raise into the company. Now, that's kind of the history. What's been changing recently? There's a couple of things that have been changing a lot. This one was a surprise to us because early on, a lot of people would use AngelList and they would put their deal on. It would go out broadly to investors. Investors would invest and could see all the deals that were available on AngelList, figure out what they wanted to invest in. This has been changing. So as we've moved, this is the most recent quarter, almost 2/3 of deals are now what we call invite only. So it is no longer true. If you were to sign up today as an investor and go on AngelList, you would see a much smaller group of the deals that are available. Instead, most of the deals are flowing through syndicates, sharing directly with the investors that follow them, and it doesn't go much broader than that. And it depends on the characteristics of the deal. If you ask me why, it has to do with a lot of the shift of mix of investing these days. Consumer companies who are looking to get publicity and get customers and press as well as fundraising have no problem with discussing it publicly. But as you move to hardcore tech companies that might take longer, or enterprise companies, they're much more sensitive about it. They tend to want to do more invitation-only fundraising. So it's still closed on the platform, just not as broadly. And because of that, most deals now have a more limited number of investors. So you still see some deals. 99 is the maximum that you could do by law, but because of that's the maximum size of a fund. But you see most of the funds that are closing with a smaller number of investors into each round. So what does that mean if you are to use AngelList as an investor, as an online platform? That means three things. That means if you're going to go into the deals that are flowing through AngelList, you either A, need to follow the syndicates. These are primarily founders of their own companies who have operating experience, who are writing their own checks. You can follow the syndicates into the deals, and 500 Startups runs one, so I thought I'd put them up here as the gracious host of the conference. And follow those syndicates, and then you can see what deals those syndicates are doing and decide whether you're in those deals. Or you can get more broad exposure to these syndicates through funds. So AngelList has AngelList funds, which are for either individual investors or family offices and institutions that want to invest more broadly. Institutions writing very large checks will tend to go through the backing AngelList funds, like CSC Upshot and Maiden Lane, and those invest through into the deals on AngelList. And we also have the AngelList Capital Program, which we are piloting right now. And this is for people who, investors who are doing $100,000 or more a month. If the lead or company gives permission, these investors can be invited to the deal by AngelList, helping figure out which of those investors that the company should include in the deal. They are under confidentiality agreements, and they choose deal by deal rather than more broad with the funds. So that's what it means for the individual investors. And it really is a mix. It's interesting to us when we look at the data because it's not like there's companies that are using the invite-only fundraising are a better group of companies or a worse group of companies. They're just different characteristics. So one example, Cruise Automation came through and raised more broadly on the platform last year. Earlier this year, they did an invite-only deal on the platform with a different lead investor. So they actually had 2 syndicates into the deal before they sold to General Motors, that billion-dollar deal from a couple months ago. So it's really a broad set. So it's something that if you're looking at getting into the deals, though, it does change how you have to interact with AngelList as an investor. So that's what we're seeing for the online, what we're seeing online is more of a move to private, and the companies, more companies using platforms like AngelList. And as it gets broader, there's a broader set of capital structures and so forth that are working with the, so that the privacy in particular, using the invite-only features are becoming much more common. So that's basically what we're seeing these days. As to where AngelList goes after this with talent and fundraising, the thing that gets us up in the morning is still this platform for startups. That's where we started. That's where we continue. We get very excited about the idea that an entrepreneur who has a great idea in his or her head and wants to go work on it should spend their time working on that idea and their customers, not worrying about all the things that surround the company. So we want to help with all those pieces, the hiring, the fundraising, and that's the mechanism we're using to figure out the next things that AngelList does. So that's AngelList. That's where I think the online platforms, our piece of the world at least, is going. I think we're going to have a broader discussion at this point about some of the other forms of online platforms and finance happening. So let's move to that. Thank you.